Good morning and welcome to Core Finance. It is Thursday the 19th of October. I'm Matt Brown. I'm joined again by Tim Harrison, who is Head of Wealth at Linear. How are you today?
Well, it's tad rainy outside, and it would appear that's had an effect on retail sales, Unilever, everything and anything. Yeah, watch this space.
Yeah, we're going to talk a lot about that in the show this morning, and we'll look at the headlines. Look, the markets are softer. UK retail sales come in lighter for September, and Chinese data as well from this morning, GDP data. Looking at those retail sales, I think they came in at 0.8% lower than expected. Good, bad for the UK economy, or just a one-off month, really?
Well, I mean, it's a tough call because, as I've said numerous times, I think the UK is in pretty rude health. That being said, this data obviously does show a stark decline in spending. Whether or not that is just you could attribute that to potentially the sort of seasonality and what's been going on, Brexit, this, that, and the other. There's a lot of sort of excuses, if you like, as to why. So it will be interesting to see with the next figures coming out as to whether or not it is actually a real slowdown or whether it is an anomaly. As I say, you've seen a lot of companies sort of warning on retail spending, so we shall see.
And Chinese data, GDP numbers came in pretty much in line with expectations, but it goes to show that China is still performing. I think the government target was 6.5%. The number came in at 6.8%. So they do seem to be firing, not necessarily on all cylinders, but doing very well.
Well, again, with the Chinese data, it's a case of how much do you believe? Because historically, you know, 3, 4, 5 years ago, Chinese data was coming in, and people were not sort of disbelieving of the actual numbers. 6.8%. I mean, that's huge. You know, Britain or the US would be dancing from the rooftops if we had GDP growth like that. That being said, it does sort of looking under the lid, so to speak. If you look at where the growth has come from, it is moving away from the government-owned entities more to private, which would suggest that my view on another soft industrial revolution coming out of China could pan out over the next 3 to 5 years, whereby the individual businesses are able to go out there and conquer, so to speak, as opposed to with an iron grip. So it's interesting data, and you know, as I say, it's not had much of an effect on either the local markets, and it's not really impacted positively, negatively over here. As I say, the FTSE is off a touch this morning. One would suggest the fact that we are at record highs there or thereabouts. It's a bit of profit taking. It's a big dividend day on the FTSE. Yes. So you've got a number of points that you could attribute to the softness this morning.
Understood. Moving on, let's have a look at a FTSE one to watch. Well, Unilever. I mean, this morning the Office for National Statistics came out and said on the retail sales that pharma, medical, cosmetics, toiletry articles, watches and jewellery were all down, and that's impacted the retail sales. So not great for Unilever, and on the back of some weaker numbers this morning.
Yeah, I mean, they're down a handful of percentage points, so they're not in the realms of IWG or Interserve, yes, who has experienced significant price moves to the downside this morning. But again, it would be a case of, I mean, these guys are such a behemoth, they are so large that any sort of slowdown across the macro landscape is going to affect their bottom line. You obviously revert back to when Kraft came in for the business at the start of the year as to whether or not they were right to reject an offer. One would suggest yes, because Unilever is doing very well and their figures are slightly light, but it's not disastrously light. But it's in their stable mates, the likes of Reckitt Benckiser, etc., you know, that are a very stable part of a lot of investors' portfolios. It is starting to see that contraction, which, as I say, is suggestive of potentially a top in the market and sentiment, etc.
Understood. Looking at the lower end of the market, AIM one to watch, a stock called Plexus. I picked this out. It's up about 6% today. I believe you've had a brief look at the company. It's an oil services group. What's your take on oil services, especially with the oil price now up at about $58 for Brent crude?
Well, I think that the whole space is very, very interesting, dare I say it, attractive, on the smaller scale especially, because you are starting to see the majors really start to move forward. I noticed an article in the papers this morning about BP not looking for new energies or different alternative energies, but sticking with their core business with what they know. So these sorts of companies will be very much in vogue over the coming months and years if they stick to what they know. The problem we've had over the last number of years is companies diversifying, trying to nick a few quid in areas that they're not market leaders in. These sorts of companies, oil services, you have seen cannibalisation within the sector, and I think that will continue as the larger players look to mop up value opportunities. Companies like this do look very attractive.
Understood. Moving on, looking at the sterling, the cable, the Great British Pound we'll call it, starting off with cable, a little bit weak on the back of these retail sales, and that's generally to be expected at the moment.
Yeah, I mean, it's a highly volatile market, right? The currency, the cable rate is moving around 131, 32, 33, 34, down to 29. You know, so it's kind of in that range. And the retail sales were, dare I say it, poor. But again, is it an anomaly or is it actually something more sinister? We shall only see in time. At around about 131, though, it's fair. As I say, I think sterling will continue to strengthen over time, but for now we're just moving around violently on the back of any sort of data that traders can either buy up or sell the currency pair.
Understood. And looking at a broker upgrade, downgrade, L'Oreal, not worth it as much according to Credit Suisse. Downgraded from outperform to neutral, and I think that probably ties in with the Reckitt Benckiser Unilever cosmetic trade. It feels that certainly some of these markets have performed fairly well, albeit I think L'Oreal's underperformed the CAC this year, but certainly investors looking now maybe to take some profits away from some of these companies.
Well, again, what you've got to look at is that people are after beta, they're after outperforming the markets. These sort of stable, conservative investments, your pharmaceutical, your big cap pharmaceuticals, your traditional L'Oreal's, Unilevers, etc. They are very boring. They don't lose you a great deal of money potentially, but what they are is not keeping up with the beta of the markets at the moment. With the markets at all-time highs there or thereabouts, people are out there for beta. They want to be outperforming. So these sorts of companies are unloved in terms of their share price movements. But again, I think you do need them as part of a stable portfolio if you are to ride through any market swings that we may see over the coming months and years.
And briefly, you touched on IWG, selling off about 20-30% this morning, formerly known as Regis. It goes to show the market is, again, punishing companies that don't deliver.
Well, we've seen it over the past couple of weeks, right? You've seen it with Carillions, the likes of Convatec, etc., where they aren't. Expectations right now across the globe are so astronomically high for companies to beat. Unless you are, as I mentioned yesterday, unless you are really, really smashing figures, then the market's not really taken too kindly to you. These sorts of companies, IWG, it's a great business model. It's done phenomenally well from essentially a backyard operation not too long ago. It's understandable that they are getting hammered, but 30%, I mean...
Buying opportunity potentially?
Again, with these sorts of things, where there is a fundamental reason to look at these companies, and office space is an area that potentially could be a good growth area, subject to Brexit negotiations, etc., etc. But if you believe in the macro economy, the UK economy continuing to strive forward, then these sorts of businesses will do well. So it's a case of at what point do you buy? I wouldn't be buying today, but there may be an opportunity in due course.
Understood. Moving on to the core number, actually talking about businesses doing well. This core number, I've already briefed you, it's the amount of investment in fintech companies in the UK. Now, it's expected, this is year to date for 2017, expected to be a lot higher than that. And overall in Europe, it's expected to come in at about 2 billion. So London is still getting the lion's share of investment coming in, maybe from China or other parts of the world. But it goes to show, albeit we're not the workshop of the world we used to be, certainly for the fintech space, London and the UK could be the place to be going forward.
Well, as I've said numerous times before, the UK has many, many strong attributes, and one of them is intelligence. We have a fantastic university structure, and that is breeding these intelligent types to go out there and form businesses, ideas, to all intents and purposes, from their university dorms, but They are businesses that add value to larger players. They are filling that niche, filling that gap. So there is a lot of opportunity there. Obviously, it's a bit of a minefield because some of these ideas may not come to fruition. But again, you've got the likes of the pharmaceutical companies coming out of universities, very, very strong. The likes of the fintechs. I mean, it's great that we are building a business, building a future on something that is very current, as opposed to the Industrial Revolution way back when we were a world leader, but that died a death.
Understood. Onwards and upwards, hopefully. And finally, the economic calendar for the day. A few bits in there, certainly for US dollar traders to look out for, but nothing really market moving today. On that note, anything to say about?
Well, see how Theresa May gets on in Brussels. Other than that, but no, I mean, look, the data coming out of the US is kind of in line with where everyone expects. Unless we see something significantly move, either to the upside or down, the trend just seems to be the boredom trend of just going up and up and up.
Understood. Tim, thank you very much for joining us today.